They told you this could never happen. They told you silver would stay controlled, capped, manageable. They told you triple-digit silver was a fantasy pushed by conspiracy theorists and fringe investors. They told you the system was stable, the price was fair, and the risks were exaggerated. And now, standing here watching silver trade above $100 in the United States, while Shanghai prints prices north of $120, one truth has become impossible to ignore. They were wrong, and the system they defended is breaking in real time. This is not a rally, this is not a breakout, this is not a healthy market discovering value in an orderly way. What you are witnessing is acceleration. It is pressure releasing after decades of suppression. It is a market that has slipped the leash and is now running on pure momentum, fear, and necessity. Silver didn't knock on the door of $100. It didn't hesitate. It didn't consolidate. It smashed through it and kept moving, as if the number never mattered at all. And that should terrify you, not excite you. Terrify you, because markets don't behave like this when things are under control. They behave like this when control is lost. The most important thing to understand right now is that nothing fundamentally changed in the last few hours. No mine collapsed. No government announced a silver-backed currency. No sudden discovery rewrote supply estimates. The move you're seeing is not based on new information. It's based on realization. The realization that the old price was a lie, the old ceiling was artificial, and the old rules no longer apply. When a market realizes it has been mispriced for decades, it doesn't correct gently. It doesn't move politely. It snaps, and once that snap happens, price discovery becomes chaos. Anchors disappear, reference points dissolve, and nobody knows where the top is because the old framework no longer exists. For years, silver was anchored to levels that made no sense relative to money supply, industrial demand, and physical availability. Each anchor gave the illusion of stability. Each anchor reassured the shorts. Each anchor trained investors to believe the price would always come back down. Today, the final anchor broke. And once an asset is no longer anchored, it floats freely, driven not by comfort, but by urgency. Now zoom out and understand what this actually means. Silver is not a speculative toy. It is a critical industrial input. It is embedded in solar panels, electronics, medical equipment, military hardware, and energy infrastructure. When silver reprices violently, it doesn't just affect traders. It obliterates cost structures. It forces manufacturers to choose between raising prices or shutting down. It injects inflation directly into the real economy. And then there are the shorts, the institutions that built massive positions assuming the price would revert, assuming liquidity would always be there, assuming physical delivery would never matter. Those positions are now bleeding uncontrollably. And the only way to stop the bleeding is to buy. But buying in a vertical market doesn't stop the move. It accelerates it. Every forced buy becomes fuel. Every margin call becomes momentum. This is how squeezes turn into spirals. But the real story, the one most people still don't understand, is not happening in New York. It's happening where silver actually changes hands. It's happening in Shanghai. While Western markets celebrate triple digits, Shanghai is operating in a different reality. Prices there are not just higher, they are disconnected. A 20-pluser spread between East and West is not a normal inefficiency. It is a structural failure. In a functioning global market, that gap would be arbitraged instantly. Metal would flow from cheap markets to expensive ones until prices converged. But that's not happening, because there is no metal to move. You cannot arbitrage what doesn't exist. You cannot ship silver that isn't available. The spread isn't an opportunity, it's a warning. It's the market telling you that the Western price is theoretical, while the Eastern price is real. One is paper, the other is physical, and only one of those matters in a crisis. This is why retail investors are confused. They see a screen price and assume they can buy at it, but when they try, they encounter delays, premiums, excuses, and waiting periods. What they're buying isn't silver, it's a promise. And promises are exactly what fail when systems fracture. Meanwhile, physical metal is flowing east, quietly, relentlessly. Vaults are draining, inventories are tightening, and the buyers aren't speculating. They're protecting themselves from currency risk. They're exiting paper and entering permanence, and this is happening against the backdrop of a much larger event, a monetary event. Because silver doesn't move like this in isolation, gold is following. Bonds are cracking. Stocks are rising for the wrong reasons. This is not growth. This is currency weakness masquerading as prosperity. When stocks and gold rise together, it's not confidence. It's escape. The bond market knows it. Yields are rising not because growth is strong, but because trust is weakening. Debt servicing is becoming unsustainable. Printing becomes the only option, and printing destroys the currency further. This is not a theory, this is arithmetic. And yet, one asset stands strangely still: Bitcoin. On a day when metals surge and currencies slide, digital gold hesitates. And that hesitation tells you something important about where we are in the cycle. In moments of true stress, people don't reach for abstractions. They reach for tangibility. They reach for things with history, utility, and physical presence. This isn't an attack on technology. It's an observation about human behavior under pressure. In uncertainty, trust collapses inward toward what has survived before. And now we arrive at the moment that matters most. What happens next? Because this is not the end. This is the beginning. Triple digits are not the destination. They are the confirmation. Confirmation that the old pricing regime is dead. Confirmation that the paper market is losing authority. Confirmation that silver is being repriced for a world drowning in debt and currency dilution. The question is not whether prices will go higher. The question is how violently the adjustment will be. Orderly repricings don't happen after decades of suppression. They happen fast. They gap. They shock. They leave latecomers behind. This is not a trading environment. This is a survival environment. The difference matters. Those who understand what is happening are not trying to time pullbacks. They are trying to exit paper exposure before the window closes. Because when confidence finally breaks, it doesn't break slowly. It breaks all at once. And when that happens, the screen price won't matter. Availability will. This is the moment history will point to. The moment the illusion cracked. The moment sound money began reasserting itself. The moment people realized too late that stability was borrowed and the bill had arrived. Silver above $100 isn't expensive. It's honest. And honesty, after decades of distortion, is always violent. The only question left is not where silver goes next. It's where you are standing when it does.